Hello and welcome to Fridays with Fintelekt. My name is Shirish Pathak. I head Fintelekt, and my guest today is Julian Dixon, CEO of Napier, based in the UK. Before Napier, Julian has had more than 20 years of financial services experience, gained at major investment banks, including Deutsche Bank, JP Morgan, and Commerzbank, where his roles have ranged from front office sales leadership to private equity. As you can imagine, Julian possesses extensive knowledge of financial services, processes, and technology, which I'm sure is standing him in good stead at Napier. So Julian, thank you so much for joining us on this edition of Fridays with Fintelekt.
Absolutely pleasure. It's my pleasure, Shirish. Thank you. Thank you for having me.
Thanks, Julian. So Julian, at the outset, could you give us a bit about your personal evolution in the world of AML CFT, how your various career moves have contributed to and sort of motivated you to get into the position you are today, and also maybe tell our listeners a bit about Napier.
Sure. So you talked in the introduction there about my background in financial services, in particular banking, and I guess that's really the evolution or the beginnings of that evolution of why I got to here. So about 6 years ago, I was doing some consultancy work for the DOJ, doing an investigation of a large bank in the US, actually. And what I was asked to do was to use what was a very new technology then called big data technology to actually help the monitor on site that had been put there by the DOJ to try and get some insights into what had been going on, because there had been a lot of problems there. And what we found was that not only was the new technology able to discover things very, very quickly, it was able to discover things that the bank didn't know itself. And the reason for that was that the systems that the bank had in place were so old and antiquated and badly put together that it was really leaving them in a disadvantaged position. So at that point in time, I realized that there was a space in the market for a provider of really well put together modern technology, big data technology, to actually come into the market and start being a little bit disruptive. And that is the very foundations of Napier. And we started putting together some technology, we built some modules, and that's five years ago now. And here we are today with Napier, and Napier has got 200 clients globally. We've got a full product set from transaction monitoring, payment screening, client screening, risk-based scorecard review, and something we call client activity review, which is really looking at a client holistically across all of those different products and globally, so that you've got a single view of the client, and therefore you can begin to understand behavioral changes. And that's where we really think that the industry is going. It's looking at behavioral changes that occur with the client post onboarding, because of course onboarding, when you onboard a client and do your KYC and know your client really well and all of that documentation, that is a snapshot of the client on a given day, and 100% of money launderers pass that. So it's what happens once they're within the system and how you can look at that and how you can measure it. And we at Napier have really been focusing on putting all of those products together to give a holistic view of the client, so you can understand the behaviors over time.
Right. So Julian, it is no secret that the pandemic has actually accelerated certain financial crime trends, whether it's money mules or the use of crypto assets. Can you share your thoughts on some of these trends and give banks that are listening in some pointers on how they can or should be better prepared to identify and deal with these risks better?
Sure. I mean, it's a really interesting question, and there's been a lot written about this. And of course, if you're a criminal organization or even a criminal on your own, and you're used to infiltrating cash into the system, it's been pretty difficult in the COVID time, hasn't it? Because there's been no one out and about, and there's been no one going into banks. Certainly in the UK, for much of the time, banks were closed for a very big part of the time, and therefore cash transactions were limited. But What I would say is that criminals adapt very well. They adapt very quickly, and there will be changes in pattern. And just going back to my previous commentary on what we see the best way of looking for criminality, it's those changes in pattern and behaviour. So if you have systems that are adaptable and can be changed very quickly, you can begin to look for the outliers or the anomalies in the patterns. Are people who used to do one thing now doing something different? And if so, why are they doing that? And those are the questions that you should begin to ask. When it comes to crypto assets, I mean, I've written quite a lot about crypto assets over the last few years. And if the viewers look at our website, they'll see a whole bunch of blogs. And I've long talked about crypto assets and my worry about the use of them for criminal behavior, because crypto assets give us borderless ways to transfer money instantaneously. So the point about crypto assets and where you need to be very careful, and I'm sure all the viewers watching this know this, is at the inflection point, the change point between fiat and crypto, and back from crypto to fiat. So those are the places where you should spend most of your attention, because that's the point where the investigations can take place as to who the people are undertaking the transactions, you know, where are the funds coming from and where are the funds going to. So crypto assets, that's where I'd focus. I mean, there's plenty of technology out there to look at the crypto assets and the number of jumps it's taken, etc. But for my mind, whilst it's in crypto world, it's less important as to when it comes into fiat world, because that's when the money becomes useful to criminals.
Right. So, Julian, you are currently working with customers in various countries around the world. I mean, I think you just mentioned that you have more than 200 clients globally. So, in your experience, what would you say are the reasons why one particular bank's AML safety program may be more robust than another bank's?
That's a great question, and it's something we've often asked ourselves at Napier. And when we engage with a client, we do ask them about their success criteria and where they are today and where they need to get to. And actually, again, if you go to our website, we do have a maturity model for anti-money laundering that you can identify. Firstly, where you are as an organisation on that maturity model, and see where you need to get to be at the far end on the right-hand side to be more mature. But what we see typically is those banks that are in a better position to be more robust, they start with having a clear understanding of the risk that they're willing to undertake, and that comes from the C-suite. So this is all from the C-suite, and the risk that they're willing to undertake is translated into policy and procedure. And those banks that have got a clear view of risk, policy and procedure are able to implement their anti-money laundering systems to reflect that risk, policy and procedure. And we're always talking to our clients saying, at Napier, we believe we've got the best technology in the world. But if you don't have risk, policy and procedure, you can still implement it badly. So we would always look to the risk, policy and procedure, and then the system that you deploy or that you have should be adaptable and be able to reflect that risk, policy and procedure. So if you ever need to look at it, audit it, or see why something has happened, you can understand that all the way through from exactly what's happened in the system to the procedure, to the policy, to the risk. And then it changes the narrative of any audits you have or any regulator conversations you have away from individual actions as to the policy and the risk policy of the bank or the financial institution you work in. And that is the most robust implementations always have that pattern.
Interesting. So, Julian, very often, the lack of scale, size, or transaction volumes is cited as a reason, for banks not adopting AML technology solutions. And this is especially in smaller banks or smaller financial institutions. So what is your opinion? I mean, how can smaller banks overcome this, automation hurdle?
Yeah, Shirish, we see this so often. One of the goals that we had for Napier when we created it, one of the visions we had was to have a tier one system, not just for tier one banks. We wanted a system that could scale from zero to infinity, and could be used by all. And we're not the only people that do that. There are many options to get cloud-based product which have a much lower price. And I think at Napier, we've done a really good job of offering really high quality product that tier ones are happy to use, that are available for much smaller institutions with much lower prices for them to start. It can be fully hosted, it can be fully managed for them. And therefore, those organizations now have an option in today's world of getting automation, of getting new technology at a much better price. And I think if you start to look at the total cost of ownership, if you're doing it manually or you're using spreadsheets and people to do that, then you may find that you're more robust and actually cheaper in total cost of ownerships with getting an entry-level system, perhaps based on the cloud, that you can deploy within your organization and get real value from, and begin to actually really attack the money launderers infiltrating the organization.
Right. So, Julian, since you've, as we mentioned earlier, working with so many banks globally, what would you say are the factors motivating banks to use innovative or, let's say, better technologies for KYC and AML monitoring? And, how much of this is driven internally by the bank, and how much is really because of regulatory expectations or regulatory requirements?
Yeah, so I think to the last point, is the bank driving it or is the regulator driving it? I think it's a little bit of both. We've seen huge fines globally over the last number of years, in excess of $300 billion. And the fines, I think, are in many cases the least pain point. It is it's the perception in the market. It's the bad press that the banks get, which hurt it more. So they're very keen, I believe, to clean up their act, and the regulators are behind this, and the regulators are continually changing, the regulations, so the hurdles always get higher, and therefore we see it from both sides. The banks are wanting to do it, the regulators are wanting to do it, and post 2008, there was obviously a huge rush to start to remediate some of the issues that have happened, and I think now we're beginning to see a change in the market where I think banks are looking to have high quality procedures and high quality systems to give really robust defense, but they really want value for money now. So they're looking at, as I mentioned before, the total cost of ownership. So what we see is that banks really want systems to do a lot of the back-breaking grunt work of getting rid of useless data and sifting through it and really highlighting to the bank's analysts the data that needs to be investigated or triaged in some depth. And I think then, you get the total cost of ownership comes down, and they're getting better results for it, and they're getting a more robust defense, which is defensible against a regulator questioning that as well. So I think there's several factors there. It's the banks want to be better, they want to be seen better. The regulators are clearly always making the hurdles higher. And then there's a cost benefit aspect going on here as well. So they need better technology to give them better bang for their buck, as it were.
Right. So, Julian, while we are speaking about regulators, so if you look at especially FIUs, which are supposed to collect, analyze, and disseminate information, are you seeing an increase in the use of AI and ML to actually facilitate faster and more efficient processing of STRs or suspicious transaction reports, so that the FIU itself can be more effective and efficient when passing on the analysis to law enforcement agencies? What's your experience with that?
Well, I think the regulators are often at different points in this, and also they don't necessarily publish everything they're doing. So if you see, MAS, for instance, is always very advanced in this, and the US regulator came out 18 months ago saying that if you're using machine learning techniques and you have to use historical data sets, you won't get punitive measures against you for finding historical errors. The UK regulator has been more silent, but I know the UK regulator has worked with a lot of the tier one banks to understand machine learning and artificial intelligence and how it's helping them. And they're becoming more, there's more acceptance of that. And, you know, for all of the viewers out there watching this today, I mean, I think it's pretty obvious to us and hopefully obvious to you that the next generations of technology and the next place that anti-money laundering technology will go will be more machine learning and more artificial intelligence. It makes absolute sense to do that. The data sets that people are getting grow very rapidly. So the amount of data you're getting, the amount of different systems is enormous, and it gets bigger. So you've got two ways of solving that. You can throw more people at that problem, or you can start to use better technology. And we're finding that banks are deciding to use better technology, and that always leads to artificial intelligence and machine learning. I would say to this point in time, artificial intelligence and machine learning has really been the exclusive preserve of the big tier ones, because it's quite, or to this point, it's been quite expensive to have those programs. And again, you know, to this point in time, you've also needed very, very large amounts of data to train the models. Now, I know there's a lot of work going on in this, and certainly at Napier, it's our ambition to absolutely democratize artificial intelligence and machine learning. So going back to, we want it to be for, you know, really small banks as well as really big ones. We will be able to distribute this at an effective price points for really small organizations as well, with pre-packaged machine learning and AI. And that's really where we're spending all of our R&D dollars, getting down to that. But at the moment, I think it's a little bit in the preserve of larger organizations, but we'll see that filter down in the next couple of years, so that it will be available for everybody. And, you know, going back to the point, this will help look at the real pain points in the data, locate the real criminals, and effectively highlight the real SARS.
Right. Thanks, Julian. So, Julian, you know, the Fintelekt community consists mainly of compliance professionals, predominantly around Asia. So, in closing, do you have any words of advice for the compliance community?
Well, guys, just, you know, keep up the good work. It's often a lonely road that we tread in compliance, and I think it can be a difficult place to be depending on the organisation. Hopefully, you know, you are well supported by your board and the senior management, and you're seen as a business enhancer and not a business stopper, as it always used to be when I was working in banks. It was seen as that. And I think that this space is changing very rapidly. And, you know, at Napier, it was, again, it was one of our ambitions to really give the power back to the compliance officers in the technology we get, and really make compliance sexy again, so that, you know, people really want to do it. They really want to get involved in it, can show the business benefit, not just to all of the guys you work with, but to the board and the shareholders and to the regulators. So keep up the good work. Things are changing very rapidly, and hopefully, you know, the technology we're bringing to you shows some real benefit.
Well, Julian, thank you so much for joining us today. It was a pleasure having you on this episode.
Thank you so much. Total pleasure, sir. Thank you.
Excellent. That was Julian Dixon, CEO of Napier, sharing his thoughts on Fridays with Fintelekt. This is Shirish from Fintelekt signing out.